Welcome, ladies and gentlemen. This is Chris again with Story Traders, and today we're going to be talking about technical analysis versus fundamental analysis. So sometimes it gets confusing. What's the difference between the two? Well, we're going to really quickly cover that in this video today. Now, technical analysis is basically analyzing statistical trends. A lot of times you'll see people basically taking stock market data or looking at charts and basically trying to figure out what the information is telling them to predict or forecast the price at a future date and time. So without getting too much into it, we can simply look at this example of Apple stock. When it's going up, if you're holding a piece of the company or a share of stock and it's going up, that's good because your value is increasing. You might have one share of Apple stock when it's $1 and then it goes up to 100. You just made a ton of money. Now on the other side, if you're holding it and it's going down, that's bad. This is very basic technical analysis. A lot of people use different indicators to kind of justify what they forecast for the stock price in the future, but those range over 100 different indicators that are offered on basic trading platforms. So if you're using TD Ameritrade or you're using TradingView or any of these software solutions, they're going to have basically 100 different tools for you to look at price, movement, volume, etc., to try to understand where the price will be in the future. So that's technical analysis. Fundamental analysis is often a lot more information that needs to be consolidated to get to basically the valuation of the company. So this approach is basically a lot of times looking at four pieces of buckets of information. One's company analysis. Is the company strong? Does it have like a strong foundation, like a Disney? Does it have assets that are not going anywhere, like physical parks and resorts that are harder to basically be competed against? Bucket two, industry analysis. How do they match up to competitors? One would be looking at Universal Studios, who also have parks. How do they match up? Do they have an advantage versus those parks, or is there some type of competitive advantage that's going to be given or received to Universal that might hurt Disney's future outlook of success as far as the valuation goes? Bucket number three, future profit outlook. This is, again, taken into a ton of information, but keeping it simplistic. Basically, you're just trying to figure out where the price is going to go based on the profit and loss of the company. Are they bringing more money in than they were a year ago? If so, then the outlook in the future is more likely to look good rather than bad for the price of the stock. And number four, economic conditions. Simply put, a lot of times this is just the category where you'll get news. How are things shaping up in the United States specifically? If it's Disney, is the local economy where a company might be focused hurting, or is it in the middle of a growth stage, or is there global factors that might play into hurting a company like Disney? So Disney is a global company, so its stock price or its outlook on its valuation from a fundamental standpoint could be affected locally by something happening in Florida where its parks and resorts are, in Orlando, or it could be hurt by the international success of its box office for its movies. So is there things abroad that might be keeping people from seeing movies in a given year or over the next few years? Things like that that will affect the broader scale economy, that will affect individual companies, that will go into fundamental analysis. So to give you two kind of easy things to kind of remember, Technical analysis a lot of times is going to be shorter term. People are going to use it to kind of understand where the price is going to be tomorrow, next week, maybe a month out. That's not saying it can't be used for longer periods of time. It definitely can be, but a lot of times technical analysis will be used for shorter time, and fundamental analysis will be used for longer periods of time. Now, if you can use both to benefit and kind of have a nice little equilibrium, that can bode well for someone who might be looking to hold stock for the long term. Someone like Warren Buffett would be way more interested in the fundamental analysis of a company because he's not day trading. He's moving potentially millions, if not billions of dollars in a company like a Coca-Cola. So if he's taking a position, he wants to know that the company itself has strong assets on the book, has a very strong outlook based on their growth strategy and initiatives, not something that he would hang his hat on based on just looking solely at the historical price action of Coca-Cola's stock. He wants to understand if a company is currently undervalued for where he thinks it's going to be 1 year, 5 year, 10 years down. Most likely not 1 year, but on a much larger time frame. So in short, technical analysis is using charts for shorter time frames, and fundamental analysis is using different buckets of information, financial statements, news, etc., to understand the value of a company over a longer period of time. That is the focus for today's video, and if you have any questions, please just leave them in the comment section. I will get to those usually within the first 24 hours if you have any questions on technical or fundamental analysis. Thank you for watching. Again, my name is Chris, and this is Story Traders.